What's the outlook for the company going forward? What are the volumes looking like? To talk more about that, we're joined by Mr. Ravi Chawla, MD and CEO at Gulf Oil this afternoon. Very good afternoon to you, Mr. Chawla. Thank you so much for joining in with us today on Markets at Noon. Mr. Chawla, I'm going to firstly start with the number that the street really wants to know. And that is, what are your sales volumes in million liters for Q1 FY24? What is that number coming in at?
Good afternoon. So we've got obviously quarter one overall the results have been very good. We've got the highest revenue and EBITDA and PBT and PAT. And in terms of our volumes, definitely we are seeing a positive growth. So the number of for core lubes is going to be 35,000 KL in the lubricants, which is showing a good growth of 3%. We had some softening in our factory fill and agri segment. Otherwise, we are growing well in all the other segments. And definitely this is a good number for us, and we've been growing 2 to 3x the market growth rate, so we continue to do that. Of course, in quarter one, as I mentioned, factory fills came slightly slow, and agri there is a bit of I would say some stress there because of the delayed monsoons. Otherwise, all the other segments are growing at 2 to 3x the market growth rate.
Right, and Harsh also joining in, Mr. Chawla. If we can quickly understand from you, what's the forecast for full year FY24? What can we expect going into FY24 and therefore even beyond that? Should we continue to expect you to, clock around 2.5 times of what the market is growing at? What's your growth number in terms of volume?
Well, our outlook has been consistent in what you have just said, that we are targeting, we have various market shares in segments like motorcycle oils, commercial vehicle oils, B2B, B2C. We have large set of OEMs. We do all round business in automotive and industrials, our B2B infrastructure segments. So in all these segments, we continue to look at our 2 to 3x commitment of growth over the market growth rate. Recently, there's been a client study, which we are also part of, where definitely 2 to 3% is the volume growth expected in the industry, and 5 to 6% is the value growth, which, better products, and definitely that is what is the outlook for the next 10-15 years. So we would continue to look at our market share gains across the strong segments that we believe are growing, and continue to leverage our OEM relations. Industrial B2B also is doing very well because of the India manufacturing impetus that is there in many ways. And our B2C share also, we believe, by increasing distribution, we've got a brand which is we consider the top 3 brands in the industry today. And in the private sector also, we have gained positions as a company across these segments. So our outlook is 2 to 3 times the market growth rate.
Mr. Chawla, just pushing on the point of volumes, last year your volume number was at 48 million liters. Last quarter, 64 million liters is what I'm reading. So what is that number this time and this quarter then?
Well, the number that you are seeing is with AdBlue, which is an additional product we do because of the BS6 and BS4 vehicles. The number I gave you was the core lubricants, which is a better number to track because AdBlue is more of a product that we do as a supplementary product. So our numbers, we grew 15% in our volumes in lubricants last year, financial year, just to give you an overall figure. And this year we have reported 35,000 in quarter one, which is only core lubricants, not the AdBlue, which is the figure which you have is with AdBlue.
Right, and sorry if I can latch on to one last question with regard to margins. They've remained in that 11 to 12% band over the last year or so. Your guidance is around 12 to 14%. How should one look at your margin expansion trajectory over the next few quarters or year, or how should one look at it?
So we're still looking at 12 to 14% because what we have seen in the last quarter is there has been some easing off on the raw material base oil cost. There has been definitely the additives also are steady. And we have actually got a 2% margin gain, around 2%, but we did invest more in our brand in April, May, June. And we have a tie-up with the Chennai Super Kings. We have 3 strong cricket brand ambassadors, Mahendra Singh Dhoni, Hardik Pandya and Smriti Mandhana. So we launched a property of ours, which we call Gulf Fan Academy. So we have invested a little more in the quarter one to build our brand metrics. So that is why you see the margin coming slightly low, but overall with the cost, the margin actually has gone more than 1.5% in the quarter. But because of the advertising, we are definitely reporting a lower, but still a growth in terms of margin, going towards the 12 to 14%, hopefully in the future.
Right, Mr. Chawla, thank you so much for joining in with us this afternoon on Markets at Noon on ET Now. Let's move